My name's Rick Bloodworth. This is the Common Sense Christian Financial Channel. Today is Wednesday, January the 28th of 2026, just a little bit before 3 o'clock Central Standard Time, so we've got about an hour before the futures markets close. And I thought I'd bring you an update on silver and talk about some of the events of the day that have been in the news and that have been, I believe, factors in what silver's been doing of late. If you'll recall, last Friday, while we don't have this particular one on the board, we closed over $100 for the first time in the history of the silver market. And then on Monday, the 26th, we had an incredible gap that ranged from $101.85 for the low to $117.84 for the high, a $16 range, and it closed very close to where it opened up at $103.78. Yesterday, it went up as high as $113.67 before closing at $112, an all-time record closing high. And then today, it opened up at that $112.09 mark. It's been kind of up and down today because of certain things in the news, which we'll discuss. Just a little bit ago, it reached a high for the day of $117.55, which is pretty close to its all-time record high. And right now, it's about $116.50, again, with about an hour before closing. So right now, it looks like we're going to set an all-time daily close for the silver market, and we may, if we continue to go up a little bit, set an all-time intraday high as well. So been a pretty good day, and it's been a pretty good day against negative news. A lot of people have been looking at today's Federal Reserve decision. They decided to keep interest rates steady, which the market was completely expecting. That was already baked into the cake. But they had a little bit of negative comments from a commodities perspective. They said that they didn't look like they were going to be lowering interest rates anytime soon. It looked like maybe the job market was a little bit soft, but starting to steady out a little bit, and inflation was still a little bit of a problem right now. So if anything, these comments should have moved the market lower, and in fact, it did just the exact opposite. After they came out with them a little bit after noon, the market did go down a little bit, but it went right back up. And again, we're testing our all-time highs as I speak. And so the Federal Reserve's news that could have been somewhat negative has not seemed to affect the silver market at all. And I believe there's a reason for that. It's the reason that a lot of people have been talking about for a long time now. The demand in silver is just absolutely too high for people trying to influence the price one way or another. Pure supply and demand factors have taken over. And in addition to that, the Shanghai market, which is the biggest physical market right now in the world for silver, is really setting the standard now. And so the influence that the commodity exchange, the COMEX, and the LBMA had for so many years is really starting to diminish. And prices are pretty much being led, at least by the Shanghai market. And so that's another factor that I think that's important for us to look at. And that's the fact that the Shanghai prices in China have been so much higher than the prices on the LBMA and the COMEX for about a month right now. I was watching an excellent interview today on Mineco 64. If you're familiar with that channel, you'll know that Mario Ineco has some pretty good guests from time to time, as well as having a tremendous financial background. But today he was interviewing a guy called Just Dario. And Dario was talking about the fact that the Shanghai exchange has been trading at a margin of about $17 higher than the COMEX has. And that gap really hasn't shrunk at all. And he also emphasized the fact that when you're talking about what Shanghai is trading it at, that is before their value-added taxes kick in, which is rather interesting. Both he and Eric Young, who's also a Chinese market expert, have pointed out that this is before the VAT taxes there in China. There's a pretty prominent guy called Jeffrey Christian I believe he's with the CPM Group. They're a commodities research bureau, which has typically been very negative on silver through the years. Now, they would say that they're realists, but you know how that goes. Probably 99% of the people who are pessimists think that they're realists, but he's fairly pessimistic. At least that has been the take I have gotten. And he claims that the values or the prices in Shanghai reflect those extra taxes that the Chinese put on that. But both Eric Young and Dario say, no, this is before that tax is added to it. So this $17 premium that the Shanghai market has been operating on above the COMEX does appear to be something that is before taxes, and so it seems like a pretty legitimate value. Because Shanghai has been trading so much higher than the London exchange and the New York exchange, what we're seeing is Shanghai has pretty much been leading the market. And so with the prices higher over there, it pulls our markets along. And as I mentioned in the past, the COMEX, the LBMA have been used to setting the market. They've been very used to influencing the market in a lot of different ways, and they're losing that influence. I don't think they like that much, but it is a fact of life. And so we just see a kind of an irresistible push upwards right now in the silver market. Yesterday we had the news that JP Morgan Chase was advising their clients to sell silver and replace it with gold. That just rose the market even more in silver. And then today the Fed came out with some information that would typically be negative for the commodities. And in fact, it's just raised the prices as well. So we have a very organic rise in the silver market right now. There is a demand that is hard to deny right now. I thought I would talk just a little bit about what mining output has done in the last 10 years. And so here is an estimate of the mining output since 2016. In 2016, there was about 900 million ounces of silver mined in the world. In 2017, it dropped to 863 million ounces. 2018 dropped to 850 million ounces. 2019 dropped to 837 million ounces. 2020 is very skewed because a lot of things were shut down at that point, but a massive drop to 783 million ounces for mining output in 2020. 2021, it came back, as you would expect, to 831 million ounces. 2022, 839. 23 was 813 million. 2024 was 820 million. And then last year, we actually had a little bit of an increase to 835 million ounces of total world mining output. And during that time, from 2016 to 2025, you had a recycling that ranged anywhere from 160 million ounces to just shy of 200 million ounces of silver. From 2016 until 2020, we actually had a little bit of a surplus of silver between those years, between mining and recycling and what was being used. But after that point, we have seen a deficit. In 2021, there was an 80 million ounce deficit. In 2022, there was a 250 million ounce deficit, a massive deficit. We haven't seen anything like that since then. In 2023, a 200 million ounce deficit. 2024, a 150 million ounce deficit. And then last year, about 118 million ounce deficit. Well, all these deficits are starting to catch up to the point where all of these silver users that have to have the silver are starting to have to go to different sources. The surplus is long gone now, and now they're having to scramble for resources. A lot of the big silver users have actually been looking into and purchasing actual mines. China has been going around the world snapping up the doré, which is unrefined high metal content product, or essentially from gold mines and silver mines, and they've been bringing that back to China in order to refine it. And this usually is a pretty extensive process. The doré has a good amount of silver and gold in it, mind you, anywhere from 50 to 90%, but it does take some extra refining in the process, much more so than just scrap silver would, for example, 90% silver would, for example, because you're just doing a straight refining on that process. But these silver users are scrambling to get the silver right now, and we just keep seeing this rise in silver that is continual. Good news, bad news, indifferent news, it doesn't matter. As I mentioned, we crossed the $100 an ounce threshold just 4 trading days ago. Since that point, on Monday it stayed above 100, Tuesday stayed above 100, and then today the low for the day was over $110, and so that's quite a bit off of this floor. Now, we know silver can move very rapidly, and it has been trading in some huge ranges of late with huge volume. Mentioned on Monday that there was over 1.5 billion ounces of silver traded on the COMEX alone. On Tuesday, 1.1 billion ounces of silver. And remember, our mining output for last year was just 835 million ounces. And so both of these dwarfed that. Today alone, even though it's just more of a moderate day, we've traded about maybe 850, 900 million ounces of silver today. And so we're seeing an awful lot of trading going on. Now, I might make mention of this as well, because a lot of people, when they hear that this amount of silver is traded on a daily basis, they think that it is incredibly high. It's unusual, it's unique, but it's really not. While we have been seeing some pretty high totals lately, on a typical day on the COMEX, you're going to see about 2/3 of the annual mining supply traded each day. And so when we talk about 1.5 billion ounces, that is huge, and then 1.1 billion is very large as well. We're still talking about a market that trades an incredible amount of silver each day. People making bets, going back and forth on what the market will do, as well as people hedging themselves against either supply that they have or supply that they need. And so there's a lot of that going on in the market, and I thought that maybe that would be worthwhile mentioning as well. There's one more thing that I heard from this interview. Dario claims that the CME group is raising the silver market to 11%, a notional margin on the silver market. I looked for information on that and I could not find it, so I can't verify that just yet. But if that's true, then just in the last few days they have gone from $25,000 margin to a 9 to 9.9% notional margin, and now to an 11% notional margin. And what this will have the effect of doing, what the notional margin has already had the effect of doing, is knocking out a lot of these people who want to short the market, because there's a couple of margin calls each day. There's one in the middle of the trading day, and there's a settlement at the end of the trading day that has to be taken care of and met, that margin, before the opening of the next trading day. And so those who have been short are not only in a negative position, but their margins are going up at the same time, since it's on a percentage basis. And so that may have had something to do with the market going up. It could be very much a way that the COMEX protects itself. It's the CME group that sets these margins. The CME group is a conglomerate of the Chicago Mercantile Exchange, the Chicago Board of Trade, the NYMEX, and the COMEX. And so they set the margins for all these exchanges. And again, it has been doing nothing but going up in recent months. It is reasonable to a certain extent, and a lot of what we were concerned about as far as tamping down the value, it has proven to be just the exact opposite. So anyway, those were some of the things that are in the news today. I would keep my eye on this range, especially if we break out of this range with conviction, where it's $1 or $2 higher on high volume and then it stays above that point for a couple of days. Well, this range that we're in right now may not last for a whole lot longer. But as long as we're in this range, we've got a little bit of a comfort level as far as being able to see some known parameters. The $117.84 ceiling, which is being challenged, and then the $100 floor, which really, since it's broken that mark 4 days ago, it has not been challenged at all. So these are things to keep your eye on. In the big picture of it all, most of us are just silver stackers for different reasons. We're not necessarily looking to trade on a daily basis. Some are never looking to sell. Some of us look to sell at certain price points as things go up and look to buy as things go down. And so this maybe will help you for some of these price points. Mentioned so many times before, you need a plan that works for your situation. It needs to be a rational plan, a prayerful plan that works for you and that you will stick to as the market continues to advance, as we're doing right now. Anyway, that's the video for today. Let me know what you think about it in the comments. I always appreciate your comments. I certainly appreciate your watching today, and I appreciate all of you who have taken the time to subscribe. But thank you for watching. I hope we'll see you again next time. God bless.